Okay, I think hopefully we've got some folks that are joining still, and I just wanted to thank everybody for joining us today for the modern appraisal discussion. We have a lot of really important dialogue that I know we're going to go through today. So first of all, thank you to Class Valuation for sponsoring our event. I also would like to introduce the folks that we have on our panel today. I'm really excited. Christy Connolly is the EVP of Valuation Modernization at Class Valuation. And in addition, Christy, you have a very well-rounded background. Obviously, you've held a role as chief appraiser, and you've also held such other key positions as SVP of compliance and SVP of operations. And I think all of these things are really important, as we talk about how we go forward with this modern appraisal process. Also joined by Justin Alexander today. He's the director of single family collateral risk at Fannie Mae. Thank you, Justin, for joining us. Justin is also an experienced appraiser. He's experienced appraiser and valuation manager, and he has spent time leading strategy for fraud and risk, as well as directing product management before he joined Fannie Mae. We're really appreciative. Thank you, Justin, for joining. I know you have a lot of important information to share. And then also Ashley Winter. Ashley is currently the valuations director at Lima Capital, which is a private money mortgage lender, but previously has held really critical roles such as senior director of appraisal, senior director of appraisal operations, as well as appraisal supervisor, in addition to leading operations support. And again, I'm really excited to be joined by this panel of people today. I am Jen Folk. I am VP of Fulfillment Operations at TriPoint Homes. And so we're really looking forward to sharing some information with everybody today. And there's some really important things, like there's a lot to learn about modern appraisal. So it's not just a buzzword, and we're really hopeful that some of our information today will help educate people a little bit more to understand, what is important about modern appraisal. So it goes beyond just money and time savings, and in today's market, those are really critical, but it really drills down into data consistency and accuracy. And I think, if you're joining us today and you're here to learn more about how this particular change in our appraisal evolution is going to help you and is how it's going to help your customers, I think you've come to the right place. So team, thanks for joining. Really appreciate all of you. I guess maybe we should start off with some just basic definitions. And, I think the key is really what is a modern appraisal? So Christy, I know you've got some really good information there. Can you take the lead and share with us what is a modern appraisal?
Sure. Thanks, Jennifer. And thank you next for having us, and Justin and Ashley. I'm glad to be a part of this panel with you. We do hear a lot of talk about modern appraisals, Jennifer, and a lot of people have different ideas about it. And as an appraiser myself, I look at it, from traditionally how it started and how I was trained and started out. And appraisals traditionally were completely based on human observations, largely without technology. And appraisers would use a tape measure and a clipboard when they were inspecting a property to capture the information. And it was very subjective to each appraiser. Everybody was, trained differently depending on who a supervisor may have been. And everybody kind of had their own way of doing things. And now there's a lot of consistency that's brought. So with the modern appraisal, I think it really is important. As you mentioned, it's data driven, and there's technology utilized that provides objectivity to the process. So we have consistency with how the data is collected. We have transparency with the technology utilized, and it helps mitigate that subjectivity. Specifically, desktop and hybrid appraisals right now, are part of the modern spectrum that Justin will get a little bit more into. And what the desktop and hybrids do is they bifurcate that traditional process that we were used to, which allows the appraisers to rely on property data that's provided by a third party that is reliable, that provides accurate and reliable property information for them, which includes a floor plan, conditions of the property, room count, potential deficiencies if they exist, any location factors, everything that the appraiser collects typically when they're on site, they can have that data provided by a third party. So they don't have to physically go view the property themselves. And this allows appraisers to really utilize their expertise as an appraiser and as a market analyst in their local markets. So they can really focus and dedicate their time to that. They can analyze the data and the market trends and really work on the appraisal analysis for the properties. So that's kind of, a high level overview of what modern appraisals are.
So actually, I appreciate understanding a little bit more about that, but I think one of the big questions probably is more how, how would contract prices play into this type of valuation? Clearly, especially in our market, everyone's a little bit worried about how their contract price is viewed. So is there more you can share with us about how the contract price may play into this type of valuation?
Yeah, I think I'll actually wait and let Justin talk about that. There is value certainty with some of the modern products. The desktop and the hybrid products. I will say the one thing that we get questioned on a lot is concerns about, oh, will the value come in lower because the appraiser wasn't physically on site? And I would say, that shouldn't be a concern. Appraisers will provide their objective opinion of value, and they still have access to all the same data they have access to when they perform the inspection. And they can reach out to the contact. If it's a purchase, they'll still reach out to the realtor to verify or ask questions about any information they might need to verify. So it doesn't impact the way these appraisals are completed, does not negatively or positively influence the value. The value, just remains what it would be either way.
So I think that's probably good timing then. Justin, I think with your background, you probably are really able to share with us like historically where we've been and then now where we are today. I know that, obviously the last 5 years have been very progressive, right? We have new offerings and we have new things coming at us. So would you like to share a little bit more about what that history has looked like?
Sure. Can you see my screen?
We can.
Awesome. Good afternoon, everyone. Excited to join you today.
Oh, Justin, looks like you froze.
And be a part of this.
You're back.
Well, I'm having difficulties here. Can you see my screen and can you hear me?
We can, and we can hear you now. I think maybe the initial screen share froze up a bit, but let's give it a go.
Okay. So yeah, just a little bit about where we've been. So, I mean, historically we've had, and I think all of you know this, we've had kind of two valuation options that all loans that come to Fannie Mae get one of the two valuation options, either an appraisal waiver or traditional appraisal. And so we've felt for a long time that there's loans that don't quite meet the threshold to get a full waiver, which we're now calling value acceptance, by the way, don't quite meet that threshold, but that also don't necessarily require a full appraisal. So we've thought for a long time that there's options that could sit between those two options, and that's what we've been working on over the last several years. We released the desktop option early last year in 2022. We've had our hybrid option, which you see there in the middle. We have been working on that and testing that in pilot for the last 5+ years. And then in April of this year, we launched Value Acceptance plus Property Data. And that is an offering where we are offering the lender a waiver or value acceptance contingent upon delivery of a property data collection. So in that scenario, the value is certain. We're giving certainty on the value up front. The lender can move forward through the loan process with that value. They just have to procure a property data collection, which is a standardized set of data that comes in through our API, and they can proceed with the loan. And we've had lenders adopting this, and we're seeing volume go up. We've to date we've seen about over 350 lenders that have delivered loans using this option, and we're seeing growth month over month in this option. So we are expecting to roll out our broader hybrid offering hopefully next year. So we're just going to continue to try to iterate on this modern spectrum and shift more loans into these kind of alternative appraisal options.
Kind of thinking through that, each time something new comes out, and we all, I'm going to say this in the industry, like we want to believe that we really are advancing and we're on the leading edge of technology. But even when they introduce just the regular appraisal waiver, What kind of length of time did that take before we really truly took off it and adopted it as a standard, when it became available? Do you have any information around that?
Yeah, I mean, it just these things take time to work through the process. As an industry, we don't move fast, and that's okay. But with the traditional waiver, the option that you see on the far left of my screen, when we launched that program in 2017, we did not see a high take up rate really until like mid COVID. So it just takes time, and in that option, there's no requirement, there's no data requirements or anything. The lender gets the waiver, and they can proceed. And even with that, we just saw that it took time to fully operationalize and adopt. So we think we're going to see similar. It's just going to take time for these things to really catch on and have a really high take up rate. But we're in it for the long run. We have aligned. We're working with Freddie Mac to align our data standard, UPD, which we'll talk a little, Uniform Property Dataset, which we'll talk a little bit more later. But we're just constantly iterating on, and we think over time that that we'll see increased adoption into these alternatives.
So that reminds me, like anecdotally, when you say 2017 maybe didn't have as fast of a takeoff of the full waiver, I do recall that time frame, and I remember expecting, especially when they became available on purchases, I thought that was going to be like the bomb. Everybody was going to go after it because then they didn't have to worry that their appraised value was going to come in different. And what was interesting about that was we found there were agents out there that said, no, I want a full appraisal, because if it doesn't come in at value, I want to be able to negotiate on behalf of my customer. And I thought, what an odd thing to be thinking of when you know that the value is warranted. So, I can understand how there's just sometimes a little bit of maybe a slowness to adopt until they fully understand exactly where it plays in. And, I think kind of speaking of like the slowness to adopt, Ashley, I know you've had some really strong experience with implementation. And so maybe that's an area where you can help share, if there's a reservation to implement this or there's some reluctance, what are some things that you've done in your organization to help really drive that level of adoption?
Great, thank you. I think for us in the business purpose lending world, we've been doing alternative valuations for over 2 years. So for us, it's a little bit, we're on that edge of, we've implemented it, we're seeing the benefits now, and so it's been really interesting to see. In the past 6 months, we're doing a lot, 40 to 70% of our volume through alternative valuations. So it's just exciting to see, because being on the borrower-based lending side and then moving to business purpose lending, it's been interesting to see that transition. We did struggle with implementation, just like we see the borrower-based lending, but I think the biggest incentive and what we honed in on was that property data inspection and really ensuring that we had the right vendor in line for that. I think that was the biggest key, because that helped solve some of the concerns with the sales and agent issues with perception and things like that, but also helped to ensure that we had the appraisers and the confidence for the appraisers to complete the valuations aspect piece too.
I think that makes sense. And, understanding how critical that partnership is, and really kind of the credentialing that goes behind it. Christy, I guess I would ask you then, with these property data collection reports, really overall, what are they, but who are performing them? How is the credentialing process working for that? Like, how do you get the right level of people in place so that we have that confidence of the report we're receiving?
Yeah, and that's a great question that we definitely get asked a lot, and I know is, out there with the consumers and realtors, they have questions and concerns with who is collecting the property data. And there are requirements for property data collectors. There are specific trainings that they have to complete that include, how to identify property characteristics, fair lending training, lots of other pieces to it that make sure that they are trained and familiar with how to take the property data collection. And the technology piece aids in a lot of that, at least, especially with class valuation, our technology is very user-friendly and does a lot of work to make it consistent with the data collection. They also do have to take an exam before they're able to, go to a live file for a property and go do the data collection. There's also annual background checks that they have to pass. So, there is some misconception out there where, we hear people say, oh, it's just an Uber driver that's coming to your house. And I think that, might have been how people thought about it initially, but we're, a few years into this, and there are a lot of requirements and, vetting and training involved in who's doing the property data collection.
I think that's really encouraging to hear. I mean, I feel like we've had a lot of discussion about appraisers leaving the industry, aging out, if you will, maybe not having enough trainees to replace them. So, having an alternative product like this, but where the level of training that has gone into the reporting is really important. What about the quality control process? So I know today we get our appraisal, it goes through a QC process. Is there a similar process in place? Is there something that kind of oversees that?
There is a similar process in place. Every provider that does the property data collections does have a QC process in place, similar to an appraisal QC, where they make sure they review the property data collection and ensure that all the data points that are required are present and that it's accurate. For example, if flooring was tagged as tile, but it's hardwood, they would make sure that all of that information is accurate. And at Class, we have our QC involves a 360-degree view and virtual tour of the property. So we have complete full transparency for our QC team to really walk through the property and make sure all the data is correct. And the underwriters then, once it goes to the client, underwriters have a similar review now where they're reviewing the PDF report for the property data collection and determining, if they see any concerns. The difference with QC for appraisals and property data collection is there is a little bit more underwriter responsibility for the property data collection in terms of whether or not inspections or repairs are required. The property data collection will disclose all the information, but unlike an appraisal, it's not made as is or subject to, it's just reporting the data. So the underwriter will review, and if they see anything that they feel might be a safety or hazard concern, they will have, it's up to them to determine whether repairs are required or inspections are required. And again, with Class, they have the availability to view our virtual tour, so they can really dig in and walk through the property and look at things at a higher level to really determine from a collateral risk standpoint, where they feel that the property falls. And I know one of the other misconceptions that we have heard with this being new over the past few years is that the data collection may not be reliable. And, hopefully some of the information I just provided will let you know that you can rely on it. But I wanted to ask Justin, I don't know what you're able to share with kind of from your perspective and what you guys have seen at Fannie, how you feel about the property data collection reliability versus appraisal reliability.
Yeah, I mean, we've been testing property data collection for over 5 years now. We have almost 400,000 property data collections that we've analyzed, comparing the data in a property data collection to prior appraisals, and they compare very favorably. The data is very consistent from what we see in appraisals, with one exception. There's one area of the property data collection that we saw challenges with early on, and that was around GLA of a property and the floor plan of a property. And it was just difficult to train agents or data collectors to measure a property and come up with a GLA similar to the way that an appraiser does it. But we've seen that be resolved through technology. We've seen some really cool machine generated floor plan technology that someone can take a phone or a 360 camera through a home and very quickly generate a floor plan and an accurate GLA. So that's kind of been resolved by technology. But we've compared the data in data collection to prior appraisal data, and we think they're very reliable. We've also stood up a process internally. Every vendor that we approve to do property data collection must go through an assessment period. So we review 100% of the data collections that come in from a vendor for a period of time until we get comfortable, until they meet a certain threshold, at which point we would pass them off to our normal loan quality control center. But we stood that process. We have a massive team of people that are looking at data collections all day, every day. We're giving vendors feedback. The vendors are turning around and giving property data collectors feedback. And it's our effort to try to help the industry kind of mature this process. We know it's new, but think about where we are today versus 5-10 years ago, where there was not a property data collection standard. There were not property data collection courses. As an appraiser, I have never taken a property data collection class or learned how to collect data. My supervisor taught me how to do it. The next appraiser's supervisor taught them how to do it. And a lot of things that I captured on site at a property were in my head. We now have a standard. We now have classes that are teaching people how to do it. And so we think it's, we expect it to move forward, and we do see reliability in the data.
I real quickly wanted to add, just like as Justin was saying about the property data collectors, in our experience, our appraisers that we're working with now prefer the property data collection that we do. The intensity of the inspection, the photos that we're getting a lot more data than we had before, and we're missing less data. So it's resulted in less revisions, things like that you probably wouldn't expect to have as a benefit of this. With the 360 views and the you're able to typically, not require any additional visits to the site and things like that. And that's some of the benefits that we've seen through using these property data inspection versus using the appraiser's inspection. So
I think that's a great point. And I think in the end, partly it's not requiring additional trips out there, but I mean, just even from the buyer's standpoint or the homeowner's standpoint, now all of a sudden it's more convenient for them as well. If you don't have to send somebody out for a second time. Justin, I was curious, like what generally speaking then, and I'm really encouraged to hear I would say the amount of oversight and what is going on with being able to make sure that the data we're getting and giving is really good. But what is the lender's obligation? So if we, for example, we want to start exercising these, what does that mean for us? What does that look like for us as a lender?
Well, specifically talking about value acceptance plus property data, that is, we are offering the lender a waiver. So the value component of the equation is done. The lender submits the contract price in a purchase transaction or the owner estimate of value in a refinance transaction. And if that value aligns with our model, then we make the value acceptance plus property data offering, and we're saying we're good with the value, you're clear to move forward. Now go get a property data collection. And so the lender's obligation in that scenario is just to review the property data, make sure it's consistent with what they're seeing in the photos, and then deliver that to our API. We think of it as very similar to the process that the obligations they have with an appraisal. A lender, when a lender delivers an appraisal to us, they must make sure, or they should be making sure that the data that's included in that appraisal is accurate. It's the same thing with the property data collection. The beauty of this process, though, is that the value component of it is done. Now it's just a matter of collecting the data and delivering that data and making sure that it's accurate.
I want to touch back on something Christy mentioned, which is that these reports, they don't come in with a subject to or an as-is value, right? It's just strictly presentation of the data, and an underwriter still needs to look at it and determine if anything that has been documented is maybe health and safety. So does that mean, for example, we see lots of cosmetic wear and tear, and then traditionally in the conventional space, there's a lot more latitude, if you will, that something might be a little bit older, but it's not a health and safety issue. So is that still something that's eligible when you're using a property data inspection report and you've got the photos? Do you have I'm going to say kind of the flexibility to say, well, that's more cosmetic, it's not a health and safety issue, and delivering it that way would still be acceptable?
Sure. Yeah. I mean, the lender has to go through an exercise of making sure that the property is eligible, but the lender, as long as the data that they're delivering to us is accurate and they're making the call and they're documenting things in the loan file that the property is eligible for delivery to Fannie Mae, then we're good with it. And we're not, I can tell everyone, we're not on our side, going through property data collection, trying to find little discrepancies here and there. It's not a gotcha or anything like that, but we're encouraged by what we've seen so far.
No, I think that's really good information. I think maybe, helping us understand a little bit more as well about just Fannie's policy. You've kind of mentioned that, you guys you're using the data, you're not necessarily going through it with a fine tooth comb, but are there things you could share specific to how your policy, operates that people should know?
Yeah. So, our policy, when we released it, our main focus was making sure that when we made the offer that it stuck. So the only way that you would lose the value acceptance plus property data offer is if loan parameters, credit characteristics in the loan profile change. So if FICO change, value estimates change, things like that, you could lose that offer. In those scenarios where the lender had already procured a property data collection and the offer was lost, we allow for a hybrid exception process to be completed so that the lender doesn't have to send someone else back out to the property to do the appraisal. So that's it. You get value acceptance plus property data offer. Our intention is for that to stick. You deliver that property data to our API, and the collateral component of the loan transaction is completed. In the event that that you lost that offer due to something changing inside Desktop Underwriter about the loan profile, then you could resolve that with a hybrid appraisal. There's some difference between. So Freddie has a similar offering. There's some differences in our policy. What I think, we'll see what happens over time if those policies become, closer in alignment. That might help with some adoption. But one thing that we know is going to help is we have partnered with them to build or align our data standard. So we will be, as of December 1st of this year, we'll be able to receive Uniform Property Dataset, which is a joint alignment of data standard between Fannie and Freddie. So we think that's also going to help with adoption.
I would hazard a guess that anytime, that things are aligned like that, it certainly makes it a lot easier on lenders from an execution standpoint, certainly. But that kind of brings me into understanding even a little bit more about that, Uniform Property data set. And Christy, I think you probably have a little bit of information on that as well, like how class is preparing for that rollout. I mean, it's only 2 weeks away now. So, presume you guys have some things in place and you're ready to go with it.
We do have some things in place. We're working on it. We're very excited, Justin, for this to come together and be one data set. And I think it will be really helpful for the lending community too. One of the pain points that we've heard is, there's two different data sets, two different API submissions. One requires a PDF report, one only uses the API submission. So there's a lot of confusion with the two different data sets. So I think this will be really helpful across the board. So we are working to obviously have our technology and our solution mirror that uniform property data set, updated training to our property data collectors. And so far, to our knowledge, there's no proposed PDF report that will be, both Fannie and Freddie. And what we found is that the underwriters really prefer having a PDF report to look at. They're used to it. They're used to having something, a hard copy of something, to look at, something in the file. So we're also working on a new PDF report that will include the UPD. So there'll be that one single data set and one report that we can provide for the property data collections on these also.
That's pretty exciting. I think I'm going to put a question out here, and I invite anyone about, probably Justin and Christy both. So thinking about this product and thinking about directionally, where we're at as an industry, a lot of what we are leaning into right now, particularly, is new construction. And, certainly that's kind of where my headspace is right now. So do you guys have thoughts? Is there a conversation? Is there anything you can see that's coming that also may evolve this product as something that can be, adaptable in the new construction space as well?
Yeah, I know Ashley has some insight on this too. I can speak to it, from an appraiser's perspective and with the technology. I mean, I think it's a great candidate to use for new construction. New construction already is done based on builder blueprints, floor plans they provide. You have to obtain what materials are being utilized, standard features and amenities. All of that information is not present on site currently. So the property data collection, if there's enough of the structure there to be able to obtain the floor plan, I think is a really great option. And then the appraiser still will do, their due diligence by contacting the builder to obtain all the additional information they need. But it's very similar to what they're already doing and provides, an accurate floor plan too. One of the challenges in appraisals is a lot of times the builder's blueprint doesn't match the measurements of the appraiser once it's actually built. So if you get the property data collection that provides the floor plan once the structure, is there, that piece won't come into play later where it's a discrepancy or all of a sudden it's larger or smaller than what people were anticipating.
I am curious, Ashley, have you seen any use? Are you guys able to use it in your space?
Yes, this is a product that we do that's very amenable to the hybrid product, because again, there is no current property to typically inspect. So we're able to significantly reduce our turn time, but still provide the equivalent valuation product we were getting before, because the property inspection is very minimal. And we have a in-house construction management team that is already managing the construction management aspect of it. So we were able to leverage it for this product, and it's been a huge success.
I think it'll be interesting. And kind of going back a little bit to what Justin was saying, even about timing of adoption and sometimes how long it takes us to really, as an industry, embrace, tools and things that are coming our way. But I think as we look forward, we just came off of an enormous rally, and appraisals were a problem, getting them in a timely manner and finding people to do them, and the cost of them being just very cost prohibitive. So I guess I'm going to ask, do you guys see this as being a more scalable solution? So should we head back into some sort of rally, which everyone I know is hoping for, that this potentially could become something that lenders want to adopt strictly because of scale?
Yeah, I mean, that's the way we see it for sure. We think that, going back a couple of years, when we didn't necessarily have some of the options that we have today, when appraisal volumes were at all-time highs, our appraisal waiver value acceptance offerings were high 40% range, right? But appraisal volume, we were seeing 800,000 appraisals come through the UCDP a month, and appraisal turn times were 2 weeks, 3 weeks, a month. If we did not have the appraisal waiver during that time, the entire ecosystem would just come to a standstill. So our hope is if we get some of these offerings out there and operationalized, and people understanding what they are, that when we get back into a market like that we have kind of relief valves to relieve some of that. And we don't love the idea of 45%, 50% appraisal waivers or value acceptance, because we have no data coming back in, and the only way that we can operate our models and make good collateral risk management decisions is with data. So if we could shift some of that type of volume to some of these alternatives where we do get data, all the better in our mind.
I think that makes sense.
Oh, sorry, Jennifer. I would just echo that. We view it the same way. And, right now what we're hearing is people, because it is newer, some, of our clients and lenders are afraid to try it. And they're saying, well, appraisals aren't an issue right now. We can get them done really quickly. It's no problem. And that is the case right now. But Jennifer, to your point, when we have the next rally, we know there's an appraiser shortage. Even what we went through in, 2020, 21, and 22, every year we're losing more appraisers. The population is aging. We're having issues bringing new appraisers in, which is a whole separate webinar we could have. But we really try to encourage everybody to, as Justin said, operationalize it now when it is slower, when you have the time, when you have the resources, get comfortable and familiar with the products and the underwriting process, get your loan team familiar with it. Now's the time to do it so that you're prepared and not scrambling the next time the rally does happen and you're behind, you're just behind on it. Get ahead of it.
I think you said exactly what I was gonna, that's exactly where my brain went, was like, gosh, while we're slow, why wouldn't we start doing this now? And so, Ashley, I think maybe, obviously you've been using it and you've been using it successfully. I mean, do you have any specific tips for overcoming launch challenges? Like the timing is now, although when it's slower, I know that we tend to operate on a smaller staff model, and maybe it becomes a little more difficult for us to implement new change. But do you have any tips or recommendations for overcoming launch challenge?
I think for us, it was really about getting the property data collection right, because I felt like that was the ultimate end all be all that we had to accomplish. And I think ensuring that, for us, we had a panel of inspectors on our construction management side, and utilizing those, as well as a property, like one of these like Class and other companies that do these property data inspections that have specialized in it, really outlining and getting that part right was essential to our appraisers adopting it and being able to, because for us, for a long time, it was appraisers not adopting and not wanting to do these. So I think that was the biggest thing that we had to overcome. And then also sales perception of it as well.
Obviously, I mean, I think there's a lot to still talk through. I think that as folks are learning more about it, it's definitely one of those things. Like, I know, I would say we did one, and we also didn't know a whole lot about it at the time. Now, this was at a former organization, so we didn't know a whole lot about it at the time. But the more you learn about it, the more it just makes perfect sense to be able to go out and say, hey, it's no different. That at least having the value, warranted or given certainty is already half of the equation with, purchase transactions today. That's always the uncertainty, right? I know we're going to open it up for some questions. I think the chat panel should be working. So if there are questions that folks want to submit, we would love to take. This is live, so we would love to take some live questions as well. And I think while we're waiting for that, I wouldn't mind asking, and this is kind of for each of you, I think you're each going to have different views, but what one challenge or series of challenges have you seen? And then how, from your perspective, has it been overcome? I know we've talked a little bit about, perception and adoption and whatnot, but do you have any specific challenges you'd like to call out and maybe reference how you guys specifically overcame them?
I think for us, the sales adoption was a big issue. There was a lot of concern still that, of conservative valuations. And I think for us, really the discussion driving that the appraiser, the licensed or certified appraiser, is still the one driving research of selection of comps, estimating depreciation, forecasting income. You're not giving that piece of the value to the property data inspector that may not have a license or certification. Those are still being done by the appraiser today. And I think, as long as you give the appraiser the credible data that they feel like they can make that decision and they understand what they're appraising, then you shouldn't have that concern. And so we really were able to put that to bed when we really sort of had that kind of global conversation with our sales organization. But I know it can be a challenge for some.
Right. I do see we have some questions. Justin, did you want to answer any part of
Well,
that?
I was just going to say, I mean, one of the challenges that we have and we still face, and we're working through trying to solve it, is just some general confusion about the different options that we have. It's a lot, and it's a lot of change in a short amount of time that we're putting out there. So we continue to look for ways to attend, events like this, write blogs, meet with lenders to help them understand, what these different options are and how they work and what it means to get an offer and what it means to take one up. And so we're working through all of that, and we'll continue to do so. But that's one thing that came to mind when you asked that question.
Yeah. I think there's some really good questions, in the chat here. And so I'm going to start with the first one, which we talked about kind of at the beginning of the call, which was value certainty. And someone asked, when you speak about value certainty, what exactly does that mean? How does that work?
Yeah, value certainty means that, or one of the biggest question marks in the loan origination process is the value, right? So a lot of times the loan is originated, the process starts, and then there's this big question mark that kind of just flows through the process. What we're talking about with value certainty is specifically with value acceptance or appraisal waiver, or our new offering, value acceptance plus property data, is we're giving value certainty to the lender upfront at the point of DU application. So we're saying the value's good. You can move through the process. There's not going to be a question mark hanging throughout the process. Now go get a property data collection, review that, make sure it's accurate, and the collateral piece of the process is done. That's what I think about.
I'm going to tie this one in because I think and the question is data collection available for manufactured home collateral? So are there any differences between the type of collateral?
So with data collection today, up to this point, our data standard, our proprietary data standard, has consisted of only single family. With UPD, the joint alignment with Freddie, it will include condo. Okay. So UPD will be single family and condo. There's not a manufactured home component of data collection. However, like we do with all of our products, we typically launch single family. We typically add condo, and we'll continue to try to iterate and expand where we can into other property types.
Gosh, you guys, there's some really great questions here, and I'm going to continue to try to plow through them. So keep asking your questions, folks. I think here's one of the ones that we did address it a little bit, but maybe we want to go back and speak to it again in case somebody missed it. So there's a question about the hybrid appraisals or property data inspection reports providing as is and subject to values. And so I think we talked a little bit earlier that it's not a as is or subject to, it's really the underwriter looking at the data that's been provided and determining. But I guess maybe, Ashley, I should ask you, when you guys receive these, are you seeing any challenges with your underwriters being able to distinguish when they may need more data or when they're okay to use the data that they've received?
So we actually, because we're in business purpose lending, we do utilize this a little differently. We do get a current as is and subject to value within the addendum. So it's not something that's completed on the form, but something that we have within our addendum to get both an as is and as repaired value.
But that would be something that would be different, right, Justin or Christy? That would be different in the residential space?
Correct. You're not going to see that in the residential space. That's primarily for business purpose lending.
Right. Thanks, Ashley. I do want to clarify though, for the desktop and hybrid appraisals, the appraisal itself is still completed as is or subject to. It's when there's property data collection with the value acceptance plus property data. That property data collection is not as is or subject to. That's where the underwriter determines when there's no appraisal involved. But the hybrid desktops, the appraiser still does need to review the data collection and determine if there are any health or safety concerns that would need to be subject to.
Excellent.
Yeah, that's right. The hybrid and appraisal, the hybrid and the desktop appraisal are just like the traditional appraisal in that regard. The difference between the hybrid and the desktop and the traditional is just the source of the data, but they're still completed in the same way on the same form and can be completed subject to or as is.
And I see the question, Jennifer, it also they also ask if there's any issues completing this type of report between the property data collector and the appraiser. There shouldn't be any issue. The appraiser still has the ability to, make phone calls to verify any information they have questions on, just like they normally would. Even if you're inspecting, you might have to research public records or contact, the county office if you have questions, or contact a realtor on something. They're able to contact the property data collector as well if they have questions and need further clarification on something.
I think that's good to know, understanding the interaction that we would have with the, property data collector as opposed to an appraiser, and definitely knowing that it took us a long time to get into the model of having even an AMC in between us and an appraiser, so knowing that kind of is mirrored is really important. There was one question in here, and I don't know if you have stats, Justin, or just kind of a general sense, but the question is, how many of the ACE plus PDRs are needing to become full appraisals? So I think that you alluded, Christy, to the fact that it potentially could become a hybrid, or Justin, you said it could become a hybrid. So does it ever have a need that it goes to a full appraisal, or hybrid is the full appraisal process?
Yeah, so the ACE plus PDR is the Freddie option, and I won't speak about their policy because I'll get it wrong. But there are more opportunities for an ACE plus PDR to result in a hybrid than there is with our offering. With value acceptance plus property data, the Fannie Mae offering, when we make that offer, our intention is for that to stick and it not to go to a hybrid process or to a hybrid appraisal. The only way that we would allow that to happen is if the lender made a change in DU and changed the value or the loan amount or the FICO or something in DU changed, resulting in the lender losing that value acceptance plus property data offering, but they had also already procured that property data collection. We would allow them in that scenario to complete the hybrid appraisal so that they didn't have to send someone up, back out to the home. So to answer the question though, on our offering, there are not many that are resulting in a hybrid appraisal. When we make the value acceptance plus property data offer, we're seeing when those are taken up, we're seeing most of those result in a value acceptance plus property data delivery.
This question, it says, so it's kind of open. It says, is unregulated. And so I guess maybe I'd like to touch on that as far as what we would consider regulated, if it's acceptable and you guys are, accepting this model. But Christy, is that something, where we're thinking about it? We know that Fannie, for example, accepts this model. Would we define that then as unregulated, or we would consider it, within guideline?
So I'll defer to Justin Nash. I think they're different worlds with this, but it from a policy perspective, it is regulated.
Yeah, I think what the question may be getting at is, are property data collectors licensed and certified like an appraiser is? And the answer to that is no. We have established some basic guardrails that we require that our lenders operate within. And that is requirements around a background check for the property data collector, and that they be trained and vetted. And we work with all of the vendors that we approve to do these things. We review their training modules and training courses that they have, just to make sure that they're capturing the essence of what we want these data collectors to do. But they are not licensed and certified today. That could change over time, but not today.
Might want to add in there, though, that we did talk about the level of oversight and QC and things that are going on with, with the reports that you guys are receiving. So it's not a complete, unmonitored situation.
No, and the data collection happens within a mobile application, and it's very intuitive. We review all of these when we approve a vendor, but it walks the person through a home and asks them to collect data. We have standardized enumeration, so it's When they go through the kitchen, and they're going to select countertops. They click on a field and it gives a list of enumerations and they select what's there. So it's not rocket science to go through and do a property data collection, but we have established some guidelines, and we are reviewing these things as they come in, just to make sure that the data is accurate. And we also feel obligated to help the industry kind of mature this process, because it's going to be a part of the valuation spectrum in the future.
This question came up, and I know this is pretty popular these days. How about solar panels? Are solar panels included in this type of valuation?
Yep, solar panels are included. They should be noted during the property data collection if they're present. And for a desktop or hybrid, the appraiser would consider them, depending on whether they're leased or owned and how the market views them from a value perspective, just the same way.
There is one question here, and they're saying they're actually not seeing a high rate of this option being offered in their DU responses. And so are we expecting there to be more of an expansion of this as you guys evolve the product? Are there things, maybe certain criteria, that actually make some properties more eligible than others?
So every lender's footprint is a little different, and that matters in how we make these offers. All of these offers will be rooted in a prior observation of some kind. So if we don't have a prior observation to consider, then we don't make the value acceptance plus property data offer. Lenders should be seeing somewhere between 5 to 10%. If some lenders are more than that, but on average, we see 5 to 10% offer rate. So if you're not seeing that, or if you would like to look at the data that we have, I would welcome you to reach out to your Fannie Mae representative, and we'd be more than happy to get on with you to discuss, just to make sure what you're seeing aligns with what we think you're seeing. As far as expansion, yes, I would anticipate expansion. I mentioned that UPD, the new Fannie Mae Freddie Mac aligned version, does include condo. So we will be expanding the offering to condo in early 2024. And then as far as expanding beyond that, I think it's like anything else we do. We're going to look to expand where it makes sense. But I think right now what you're seeing today is probably as small as what it'll be.
And this question kind of tags into it. They're asking about expanding on the timing of the UPD. I know you mentioned that kind of early on in the call. Do you want to go over that again?
So timing of UPD, we will be able to receive it, accept it on December 1st of this year.
And so is that going to be specific to any case file assignment dates, or is that really, as far as like everything delivered on and after December 1st is eligible for that?
So anything delivered after December 1st would be eligible to be delivered on UPD. What we will do is we'll have a grace period where we will accept our proprietary version and the new UPD for a period of, I think right now we're slated to allow both through April of 2024. So about a 4 or 5 month grace period there, where a lender or vendor could deliver either or. But after April 1st, they would have to deliver when we make this offer, they would have to deliver the UPD.
Ashley, maybe this is a good one for you. And I think, we talked at the top of the call about education being just really important to this initiative. And the question is, how do you handle borrower education on this process? And maybe not so much the first-time home buyer, because they know what you teach them at that moment in time, but how about those that have already been through the home buying experience and now you're telling them it's going to be slightly different? Are there things you guys have done to address for that?
I mean, honestly, we have definitely prepared education to say that we have just sort of bifurcated the process. We're using a trained inspector and a licensed appraiser to complete this. in an effort to streamline and provide a speed to cost, speed and cost to close. So I think that that's been a process that we've utilized to do this. We actually use inspectors versus some other companies that don't use licensed or certified inspectors. So we can technically say that, but that is something that we utilize in our, disclosure and application process.
I just wanted to add to that. That's definitely something that we're seeing questions and some hesitance on currently with the, with the traditional lending, with borrower and realtor confusion, not really understanding. And I know Ashley said a big part of their success was the sales education with their sales team. So they understood and they adopted it. So I think it's really important that the sales team, LOs, processors, whoever's having that direct communication with the borrower is able to explain these products, what they are, what they can expect, what the benefits are. Because what we're finding is sometimes when we're trying to work through them, through the files, they weren't explained to, that it was even not going to be an appraisal. So they don't know what it is. They don't know it's different. And, they don't have the relationship necessarily with the AMC or the provider that's, working on their files. So I think it's really important to make sure that the sales team and anybody having that interaction is really educated and able to speak to it.
Absolutely.
I think that's good advice. And I think that I was going to bring it up earlier, but even understanding, having our agents understand, what the value proposition of this type of report would be. It's really important. This question came up in a couple of different ways. So I'd like to maybe see if, Christy, this is something you can speak to, which is, what are the fees, for data collection and the appraiser, and is it the same or more? We talked a little bit about, there is some kind of maybe perhaps cost savings. Can you speak a little bit to how that works?
Yeah, I mean, the fees obviously vary. I don't know that I can really get into specific fees, but the fee for the data collection is less than the fee for a full appraisal. So if you're doing a value acceptance plus property data collection with no appraisal option, it is a lower fee, and it should be a quicker turn time without the appraisal piece. So the consumer is saving some money there. If it is one that upgrades to a hybrid, where Justin said, that's a low percentage. With Fannie Mae, and I can say from our experience, it's a low percentage across the board that upgrade to a hybrid, but it's not a full fee. The fee for the hybrid is different than the fee for a full traditional appraisal. So the consumer isn't. I think one of the questions in there was like, is the consumer charged multiple times for all of these different things? So the way it's typically set up is, there is a fee for the hybrid appraisal, but it wouldn't be the same fee. It wouldn't be a property data collection fee plus a full appraisal fee on top of it.
That makes sense. I see there's still several.
We do see a slightly reduced fee, but for us, the biggest thing and what we really push out there is that it is a quicker turn time. It is the single access versus, depending on your loan product, it can be two inspections required. The single access is really how we've definitely sold it versus the cost savings. But for us, there's a little bit of a cost savings.
Time is money too. And again, when we think about what could happen during a rally, you can't lose that valuable time. You're burning a lock. So at some level, it's going to cost one place or another. So I think that's very valuable feedback. We do have several questions, and I think maybe, I'd like to invite the panelists to kind of review some of those, and if you can provide back some answers afterward. But kind of in keeping with trying to keep on time, I just would like to ask, is there anything from each of you as panelists that you guys really hope our participants are leaving with after today's webinar? Maybe Christy, I'd like to start with you.
Thanks. Yeah, I mean, my hope is just that everybody leaves with a really good understanding of what these products are, what the benefits are, and how they can utilize them to really help consumers and just get comfortable with them.
Ashley?
Yeah, I think confidence that it can be done. I know a lot say the operational impacts are significant, but confidence that it can be done and that it's being done today, and that we are seeing the benefits to it. And then that it's resulting in, borrower savings, borrower time, and that really helps it be a competitive advantage for us as a lender.
Great, thanks. And Justin, I know you've shared a lot with us. Is there anything that you really hope that we as participants can leave with?
I mean, change is difficult. Change is slow, but we've we've seen these things evolve, and we're seeing more and more adoption. We're going to continue to iterate and try to make these things more clear. There's certainly some things that we can do on our side to make them easier for lenders to operationalize and adopt, and we're looking at ways that we can do that. We're in this for the long run. Property data collection is going to be a component of valuation in the future. We are not in the business of trying to get rid of appraisers or appraisals. They just may look a little, their day-to-day work may look a little bit different, but we're trying to create efficiency and some cost savings for consumers. So really appreciate the time today.
Appreciate it. And thank you guys all for joining. I know it was really, really valuable discussion today. So thank you.
Thank you.
Bye, everybody.
Bye.
Thank you.